Welcome back to 7-Minute Options. Today's Friday, June 18th. The market closed about 2 hours ago, and I thought I'd take this opportunity here to go through my portfolio. All right, let's see if I can get through this portfolio in 10 minutes. I don't think I can do it in 7, but I'm going to try for 10. So today was not a particularly good day. The SPY had a bit of a hiccup, down 5 points on the day. My portfolio was down 430. Again, this is far from an exact science here, but that would indicate that my SPY weighted deltas here are somewhere in the 80 to 90 range. And even though I'm only showing 25, I've known for quite a while that it's actually higher for real, because some of the stocks like Palantir and IPOD, that their correlation coefficient is just not very accurate, right? These stocks haven't been on the market long enough to have meaningful correlation coefficients there. So anyway, it's a good guide. That being said, though, it's a bit of a small hiccup in SPY, but we've seen those hiccups. They come around once every couple of months. We can see here, if this blue line is the trend line on SPY, then it seems like, roughly once a month or so we dip below, and hopefully we'll just go right back like we did before. And you can see IV picking up, which is one of the reasons why I got hammered today. But hopefully as soon as volatility goes back down again, we'll be in a much better shape. So going through my portfolio real quick, I like to sort my portfolio here based on my positions P&L. So here, my P&L since open, the red ones are the ones that are, losing position. They're the ones that are giving me a headache, keeping me up at night kind of thing. And these are the ones that are offsetting those and doing well. So IPOD, quite a while ago, I sold a 12.5 to 10 put credit spread, thinking that IPOD was going to go up. Again, this was part of the SPAC craze. Didn't work out. I have 3 contracts against it, which, again, this was just not a very good move. This expires in 28 days. And it's below my break even. Interestingly enough, there is $36 of extrinsic value in here, which means if I want to roll it, it is possible to roll it. So, maybe like, $3 of credit, but then again, it costs, $2 in commissions to open up the positions in the next monthly cycle. So basically, I can roll these for a scratch and buy myself more time, which is probably what I will do sometime next week. I definitely don't want to just close these at a $300 loss. I think there is some room for those to go up. Gold, this is a position that we talked about earlier. I got a pretty wide. I got a $10 wide iron condor, and my short call is being challenged on the put side. It looked like this morning that it was going to start going back up and reverting to the mean, but later in the day it turned even more negative. So come Monday, I'm going to be managing this. So come Monday, I'm going to try to roll this into the next monthly cycle, because I'm close enough to my short strike and my break even that there's still extrinsic value on both sides. So even if I take the 2 puts, for example, I can actually roll it out to August and pick up 57. And the calls I can roll out and pick up just a little bit, right? But the point is I can pick up some, right? It's right now it's telling me $34 if I roll it to September, but of course I want to keep it in the same monthly as the other one. So I'll probably get somewhere like $15 or something for it. I might even roll it down a little bit toward my put strike, which is one that's getting challenged. So by rolling it out and down closer to where the stock is, I'll pick up a little bit additional credit, but then I take some more risk on the upside. So that's something I got to weigh. But anyway, I got to look at this come Monday. All right, RTP again. This one actually, I sold a put and I used that to finance a far out of the money call. Actually, 2 far out of the money calls. Right now, it's just hovering at my short put. Then again, I gave myself 2 years for that one, so I don't have to worry about that for at least another year and a half. That's just sitting there. That's one of my long shots. NUE. This one, this is Nucor. We just opened this up 2 days ago, and this sure enough moved against me. So there it is. A big move down. And again, this has been moving down for 1, 2, 3, 4, 5, 6, 7, 8 sessions in a row. And when it has that kind of continued momentum in one direction, you can see the RSI is very low. You expect it at some point to reverse, and that was the play when I opened it 2 days ago, and thinking, okay, at some point, the selling is going to stop, and it's going to stop and go back toward the mean and sort of go back up again. And I still think that is the case. So I'm going to give this another 10 more days before I have to roll it. And if I got to roll it, maybe it'll still be close enough to my short strikes that I can roll it. If not, I'm going to try to maybe turn it into a butterfly and cut my losses there. But that's there for Nucor. SLV, same story as gold. Earlier today, it looked like it was going to revert a little bit and maybe even be slightly green for the day. But just like gold, it went down. Interestingly enough, I just checked that over the past 3 months, silver and gold are almost perfectly correlated. The correlation coefficient is like 0.95, which is extremely high considering that silver and gold are typically not that well correlated. They have different industrial uses. They have different values as precious metals. And anyway, it's just, you wouldn't expect it to be that perfectly correlated. But over the last 3 months, they have been, and that's kind of what we're seeing today, is silver and gold for the past 2 or 3 days, ever since the big Fed announcement, have been moving in lockstep. VIX, this is actually a bullish position in VIX. I always have this on. I go and I try to buy the 20 or the 30 delta VIX naked call. This is just an insurance policy. So in case the SPY has a major drop or a major sell-off, VIX will spike. And then I can hopefully, this will allow me to sell this for a gain, which will offset some losses. So it's kind of like an insurance policy, and I always have it on. Massive spike in the VIX today, 2.95 in 1 day. Oh my word. That's the biggest jump in the VIX in quite a while. Look at that. Look at that movement today in the VIX. Ay, ay, ay. Okay. Moving on. Tilray, we opened this position 8 days ago and 4 days ago. So 8 days ago, I opened the Jade Lizard, and that was a 17 put. And just for most of the day, it was above 17. I guess it closed just below 17. So now my short put is in the money. So we're down here with Tilray. If Tilray keeps moving down, then I'm going to be in that losing position there, but it's a naked put on that side. So I'm just going to let the call spread expire worthless, get as much credit as I can. It's only like 20 or 30 bucks credit on that side over there. And here with Tilray, I'm just going to roll it into the next monthly cycle. Down here, you can see it it kind of bounced off 13 previously, and it went flat around 14 before this big move here. So I think it's going to flatten out at some point in the next week or so. And then hopefully I can roll it, or it might even come back. So the interesting thing is we opened up an 18 to 19 debit call spread, and that one actually, I don't really have much hope in now. That's 28 days away. And so what I'm looking at for now is, yeah, I paid 42 bucks for it, thinking that it was going to go up and I can close it for 100. I can still sell it today for 28, which means that's actually maybe not a bad option. You know, maybe on Monday, if I can sell this for 25 bucks or more, I'll just take my $16, $17 loss on it and close it out. You know, it was a fun little play, but it went against me. And if I get out of it soon, then I won't have to worry about losing all 42. Maybe I'll only lose like, 16 or 17 bucks on it. So I might be able to get off pretty lucky on that one. RMO, Romeo Power. This one is just an awful position. So I keep rolling this one, but this one is so far out of the money. So again, I sold the 15 short put back in the day. You can see I've rolled this 4 times, and I got $1,500 of buying power, tied up in this position. And I'm just waiting for this to go back up. This is one of those EV stocks, electrification play. And I'm hoping that Romeo Power is going to eventually just come back. But right now, this thing is just destroying me, right? It is more than $6 in the money. So I sold the 15 put, and right now it's $8.77. Yeah, I can roll it, but it's so far out of the money, there's no money in it, right? If I try to roll it into the August expiration, right now it's in July. Yeah, you know what? I'll pick up 20, which is actually pretty good. And that's because the IV rank is 54, but like it's pretty good that I can still get 20 bucks for a position that is that far out of the money. Just out of curiosity, what delta is that? If I look at it right now, this is 88 delta. I mean that's deep in the money. Like 12% chance that for whatever reason it won't be in the money. So that there's a good chance that this is it's gonna continue to be in the money for a long time. Even if I go out to, like, let's say December, where is the 15 put in December? 68 delta. So even there, I'm only looking at like a 32% chance that even by December this comes back. So I'm gonna be rolling this for a while. Anyway, that's a painful one. Clover, what I got in Clover here, I just sold the 10 naked put, and it's at 12, so that's fine. Interestingly enough, on Clover, it's been going down, which means I'm not actually making money on this thing. So yeah, there's like every single day I'm collecting more and more premium, but it's moving lower every single day, which is kind of like it's not helping me. So I got time premium helping me, but I got this movement toward my short strike that's hurting me. So even though I've had this open for 10 days now, and it's still out of the money, I'm still actually underwater on this position. But now with 28 days left, I expect this to turn in my favor pretty soon. And if it doesn't move in like the next 10 days, I'm just going to roll it out. I can get good credit right now. It's fairly close to the money. yeah, I can get 60 bucks by rolling it into August. So that's my plan for Clover. Tesla, I just have this butterfly that's 2 years away. Again, this is one of my dream plays here. You know what? I spent 120 bucks. I can't lose more than 120. And if Tesla does reach 1,000 or 1,200 or 1,400, I might be able to sell this for 1,000, maybe 2,000 bucks, maybe 5,000 or more. I might have to wait a year or two for it, but we can all dream, right? And this is one of my YOLO plays. But again, I can only lose 120 bucks. I'm going to sit on it for a year and a half, 2 years, and if Tesla keeps going up, this position will be worth 1,000 or more. The maximum here is a $20,000, right? It's a 200-point move. So if by some magic, some lottery ticket type scenario, if Tesla expires exactly at $1,600 on January 20th in 2023, then this will be worth 20,000 bucks. But again, that's like a lottery ticket. Nobody should be expecting that kind of an outcome. That's what I'm saying. If I can sell this for 2,000 or 3,000, maybe 5,000, I will be a very, very lucky man. Adobe, this is the earnings play. And earlier today, we were up like 30 or 40 bucks. And, it's incredible because Adobe pulled back. It's still in the money, but it's funny how it opened at the short strike. So it opened at the short strike, came all the way down. And then since then, it has pulled back. So earlier today, we were up 30 or 40 bucks, but now it's getting uncomfortably close to that short strike on the call side. And so right now it's showing -2. Actually, what I think I am going to do Monday, now that I have to start thinking about being defensive on this, because my short strike is at 570, Adobe's at 566, very close, is I'm going to take the puts and maybe roll them up a little bit. So right now I have the 525 short put. Maybe I roll it up to 535, 540, and try to collect some more credit that way. Workhorse, I have a put credit spread. Got the my short strike is a 12 put. Right now it's at 1487. It's a very small position. I mean, I got 61 credit for it, and I'm trying to close it out for 25. Just like an easy $30, $35 gain there. And right now I'm at 12. If Workhorse keeps it up, which I think it should, yeah, it's just going sideways, which is exactly what we want. I think I'm going to be okay there. Not a big win, but again, not a big risk or loss either. EEM is a strangle. This is the emerging markets ETF, and yeah, I think for some reason, volatility has been going up and down, but yeah, not a lot of big movements in there. A lot of these movements are small, and there's my short strike there. Actually, if I zoom out, you can probably see both. Yeah, so my short strikes are far away from this ETF, and again, generally you don't see huge moves in ETFs. That's one of the good things about them. So as the day goes by, each day I collect a little bit there. So far I've collected 18, and my goal there is to collect another $14 to reach that 50% range. So hopefully that's going to close in the next 10 days or so. DraftKings, aka Donkey Kong. This one is up 21 right now. Again, this was a little bit better yesterday when it went up. I think we're up like 30 or 40 bucks, and now today there's a small move down in DraftKings. And again, I'd like, if this would start moving back toward the midpoint of these two short strikes, I could get some premium quicker. But it's going sideways, which is fine. It's been going sideways for 3 days. That's perfect. Every day we're going to get a little bit more there. EWZ, again, that's the Brazil ETF. I just have a naked call. I was basically waiting for this to go down because this is where this line represents where we sold it. It was a big up move, so I was thinking, okay, I'm going to sell the call, wait for it to go down. If it goes down, I can sell the put. Because remember, I can sell the put right now against it without any additional buying power and turn it into a strangle. But right now, it's just a naked call. Right now, it's not moving down quick enough. But I don't know. I'm thinking maybe if it actually does cross that 20-day moving average, maybe I will sell a put against it and hold that put for like another 10 days or so. And then in the 15 to 20 days left expiration period, I can close a strangle. But whether I turn it into a strangle or not, I'm pretty happy with what it's done so far. I'm almost at that magic 50%. I just realized I don't have a GTC order. Let me pull that one in. So I got 55. It's a $1. So let me close it out for, I'm going to close it out for 27. There we go. So 50, that's 50%. Plus the $1 commission. Again, that's a personal thing. And so, yeah, hopefully, with 32, it only needs to go $5 more, and it will automatically close. Snapchat. We opened a strangle on this 4 days ago. And let's see, where's the upper one? Yeah, there's the upper one. It's perfect. It's moving up. It's right around the midpoint. This is as good as it can get. Volatility is a bit high. What else are you going to do? But at least we're moving toward the midpoint, so we're up $29 on it so far. I still want it to go another 40 bucks more before that automatically closes. Okay, Wish. We opened this 2 days ago. Again, Jade Lizard there. Yeah, sold the 10 put and sold the 14-15 call spread. It's at 11.40. You know what? It's going sideways. That's what we want. So that's perfect. It's going sideways. Keep going sideways. I'm happy with that. We're up $31. I need to go only 18 more. Just 18 more dollars. Then I get the automatic close that I'm looking for on the GTC order. That's perfect. Square. Same thing. I got the butterfly. That's 2 years away. So hopefully, again, my max loss there is $38, and I can make, in theory, like the lottery ticket finish would be $2,000. So if I can close that out for $500, $600, $700 on a big up move from Square over the next 6 months to a year, I'll be very happy. Again, this is one of those entertaining positions. My max loss is $38 on it. So love these kind of positions. The only complaint I have is that the actual daily P&L goes crazy on these. Like in reality, this expires 2 years from now, but somehow I'm down $124 each day. And the reason why that is, if I look at it, I'm way out here in Jan 23 on this position, is if you look at the bid-ask spread is so wide, right? It's between $19 and $21. That's like a $200 spread, right, between the bid and ask. And you multiply that like 3 times because you actually have to take the midpoint of these 3 positions, and your daily P&L, it goes wonky, right? Because the system is trying to guess the midpoint of all 3 positions. And so, yeah, like same with the Tesla position and Square is like a good chunk of my daily P&L is dominated by this daily gyration of like Square and Tesla. And it's almost meaningless, right? Like who knows where it's going to be 2 years from now. And it's a crazy out of the money butterfly anyway. But for some reason, when you mathematically calculate it, it does really sway my daily P&L, which annoys me. But hey, it's part of the game. I'm not going to complain. And this one here is actually a bullish position. So I put this on for 35 credit. Again, way out of the money here. Selling the 150 put on Square and buying the 145. So it's a $5 put credit spread. That's my max risk is $5 there. On the upside, it's a debt. I used that to finance a deep out of the money 330, 340 credit spread, which could get me $1,000 if Square goes up past 340 in the next 217 days. And if it doesn't, if Square just goes sideways, I'll just collect the 35. Again, this ties up $500 minus 35. So $500 buying power roughly. And the theta is almost zero, right? Because like I have to wait 217 days to get the $35. But hey, if there is a big move in Square, I'm a big fan of Square. That's just my own personal opinion. I like the stock. If that goes up, I will be able to sell this for $500, $600, $700 or something. So that would be like an ideal outcome there. ARK K, we sold a strangle in this one. This is the ARK Innovation, one of the ones that are more liquid on the options markets. And so yeah, it's a strangle. There's my short call, short put. It's just going sideways. Look at that, perfect. It's been going sideways now for the past 2 weeks. It's actually starting to tick up toward my short call, but still got quite a ways to go. So I'm not too worried about it. So far, we're up $60, and I needed to go 42 more. And Palantir, so this is a covered strangle, where basically I have a strangle, but I don't like to hold strangles where there's undefined risk on the upside. So the way I cap my risk on the upside is I actually hold 100 shares. And so I have 100 shares, and I have a strangle against it, and so there's no risk to the upside. And so actually right now, this is in a max profit situation. If I look at the curve, where are we in this one? Okay, where's the little flag? Come on, the flag. There. Okay, yeah, it's right there. So we are at 25.37, which is right about there. Actually, that little line is supposed to be the flag. So that's where the stock is right now. We are on the orange curve, and I'm just waiting every single day it gets closer to that solid line. And so one of the decisions I have is, do I hold it and keep rolling the calls on the puts, or do I close it out? And what's happening is next month I got earnings in Palantir. I won't make the August expiration, so you can see the earnings call is before the August expirations. It's on August 10th, and that's 10 days before the August cycle. So I don't want to take this strangle into earnings, or maybe I do. I mean, like I said, my risk on the upside is capped, but I think what I'm going to do is, with IVR being that low, I'm just going to let this one expire, or maybe close out like a day or two before, and then see what happens. And if there's a good earnings play, maybe I'll set up a similar position right before earnings on August 8th or 9th or something. But haven't decided what to do with this yet, but it's in a very good position. NCLH, that's Norwegian Cruise Lines. I got a debit spread here, 30.35 right now. It's at 30. I paid $72. Interestingly enough, even though it's only 30 cents in the money, I could sell this for 182. Quite surprising that it's that richly priced, and maybe I'll just get out of it. Like maybe if there's a new COVID strain and whatever, and maybe that's going to affect the cruise lines again, then maybe I'll just sell this for 110 profit, right? 110 gain, and just close it and be done with it. So this was one of my recovery, like opening up stock, saying, hey, you know what, Norwegian Cruise Lines is going to go back, and maybe I'll just close it, take my 110 profits, and not worry about any more COVID nonsense. All right, PayPal, same thing as with Square. I sold a put credit spread to finance. I sold a put credit spread to finance a debit call spread, and same thing, taking $5 risk on the downside, $1,000 of potential gain on the upside, and if it just goes sideways, I keep my 30, which is where we are right now. They're both really far out of the money, so there's a good chance I'm going to just keep the 30. But again, I got to wait 91 more days to do it, so doesn't help my theta. Oh, and there we go. Where did my positions go? Okay. And what else? SoFi. So SoFi is doing really well, actually. This one was a bit of a complicated one. I sold a put credit spread to finance a debit call spread, but the two kind of overlapped. And again, this one, I'm really happy with how this one turned out. So if I look at it, there it is. And right now we're at 23. So again, we are at max gain. And every single day, I'm waiting for this orange line to get closer and closer to the solid straight line at expiration. So there's still, let's see. There is still $182 of extrinsic value that's going to come out in the next 28 days. And I haven't decided yet, do I want to roll it or close it out? But because it's a debit call spread and it's all in the money, I'm just going to close this out. I'm just going to let it go to expiration, maybe like a day before expiration, close it out. Don't hold credit spreads or debit spread. Don't hold spreads through expiration. There's some complexities that can happen because some can get exercised after the market closes for like an hour, hour and a half, depending on which one you buy, blah, 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 blah. And there's this remote chance that one of the two options will get exercised and not the other one. And it's a mess. There's some videos on YouTube like that it happened to some people and it really hurt them. So just a recommendation. If you're in the money on a call spread or a put spread, whatever, if you're in the money at expiration, don't hold it through expiration. If you're out of the money, you can let it expire. But if you're in the money, close it out like a day before because you don't want to be holding that. But that's just, anyway, it's not investment advice, but just FYI. And last position I have on my portfolio is Fubo. And same thing, it is a covered strangle. So I have a naked put, a naked call, and I bought the 100 shares just to cap my risk on the upside, same as Palantir. And with Fubo, I don't have earnings coming up. Oh, I do have earnings on August 12th. That's good to know. Okay, so I might just close it out. Again, Fubo has been really good to me. Their IV rank is actually quite low right now. It's 7, so maybe I'm just going to let the shares get cold away, or maybe I'll close this a day or two before expiration. I'm not sure. I want to hold this to earnings. I might set up a new position just a few days before earnings, but Fubo has been really, really good to me, and I kept rolling it out. So, that has been my sort of one of my bright spots there. But anyway, that's my portfolio. Thanks very much for listening. If you think one of my positions is stupid, please leave a comment. Let me know. You think there's a good position that I should be looking at? Let me know. I'm always out there looking for new ideas. Thanks very much for listening, and I'll see you next time.